Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 7th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Beijing blasts Trump as two-faced. China's foreign minister delivers a broadside at the US president as tensions rise.
Reversing course for now, Trump delays a large portion of his administration's new tariffs on Mexico and Canada.
Plus, shaky sentiment. Markets remain unconvinced by Trump's latest move on levies as the Nasdaq nears correction territory.
Let's start with a roundup of our top stories.
China's top diplomat has attacked President Trump's approach to China and tariffs. Foreign Minister Wang Yi said on the sidelines of the National People's Congress that the US shouldn't return good with evil. His words are spoken by a translator.
Mutual respect is a basic norm governing state-to-state relations. It is also an important prerequisite for China-US relations. No country should fantasize that it can suppress China and maintain good relations with China at the same time. Such two-faced acts are not good for the stability of bilateral relations or for building mutual trust.
Wang, a veteran diplomat, defended his country's actions on stemming the flow of fentanyl to the United States and accused Trump of using the issue as a pretext to pressure the government. It marks a change in tone from China, which had met this week's increase in US tariffs with targeted actions.
President Trump, though, has delayed tariffs on goods from Mexico and Canada, covered by the North American Trade Agreement, until the 2nd of April. The move to exempt at least half of all goods from the new 25% levies offers a major reprieve to America's two largest trading partners who had signed the trade agreement with Trump in his first term. We get more now from our senior policy analyst from Bloomberg Intelligence, Nathan Dean.
We're coining this a shock and awe strategy for tariffs, where President Trump comes out here and says, look, this is what I'm going to do. It's going to happen. I'm not going to negotiate. And we saw this with Canada and Mexico. Tariffs are on, 30-day extension. Tariffs are on. Now we're seeing the exemption for Mexico. So come April 2nd, which is the next major catalyst, obviously there's potentially some negotiations with Canada to go between then.
Nathan Dean, pointing to the latest development in a frenzied week that began with President Trump applying across-the-board tariffs on Canada and Mexico, as well as doubling tariffs on China to 20%.
The headlines on tariffs sparked intense, quick and sharp swings on the stock market and losses across the board by the end of the trading session on Wall Street. The S&P 500 slid by 1.8%. The Nasdaq dropped by 2.8%, despite some tariff relief for Canada and Mexico. Speaking to reporters in the Oval Office, President Trump was asked why markets seemed so spooked by tariffs.
Well, a lot of them are globalist countries and companies that won't be doing as well because we're taking back things that have been taken from us many years ago. We've been treated very unfairly as a country. We protect everybody. We do everything for all these countries, and a lot of these are globalist in nature.
Trump's comments came as the Nasdaq neared correction territory, falling by 9.6% since its record high in February. Crypto assets also dropped as Trump's executive order creating a strategic Bitcoin reserve fell short of industry expectations.
Volatile markets have been proving tricky for hedge funds to navigate, with several top funds posting lacklustre returns in February. Bloomberg's Ewan Potts has the details.
Analysts at JP Morgan say the volatility in late January that persisted into February drove lots of questions around hedge fund performance. As market gyrations reversed momentum on key trades and clobbered popular stocks, including many of the Magnificent Seven, Millennium, Citadel and other top hedge funds reported soggy returns during the month. Bloomberg understands Jane Global fell about 1%, Millennium lost 1.3% and Citadel 1.7%. Losses were driven by overcrowding in a small group of US stocks, particularly healthcare and technology. Hedge funders will be hoping that this month doesn't see a repeat of what JP Morgan called February's pockets of painful performance. I'm Ewan Potts, Bloomberg Radio.
EU leaders backed a plan to reform their fiscal rules, echoing Germany's defence push and potentially unlocking trillions of euros. The spending surge comes as the continent comes to grips with its vulnerability without American security guarantees. Defence officials tell Bloomberg a Russian invasion would breach front lines in weeks without US support. France's President Emmanuel Macron is a key voice calling for rearmament.
C'est-à-dire que compte tenu de la menace et quoi qu'il advienne, given the threat and whatever happens in Ukraine, we need to increase our defense capabilities and we need to build, in the next few years, autonomous defense capabilities for Europeans.
Macron has been trying to coordinate a European effort to organise a Ukraine peace deal. European sources say President Donald Trump wants to link his proposed US-Ukraine minerals deal to demands for Kyiv to commit to a quick ceasefire with Russia.
The European Central Bank is heading for tough negotiations as policymakers differ strongly on where interest rates go next. The ECB cut its base rate to 2.5% yesterday, as was widely predicted. But with a global trade war brewing and trillions of euros being earmarked for defence spending, both markets and policymakers are unsure whether to cut interest rates further or hold steady. President Christine Lagarde relied on a central banker stock phrase when answering questions about the outlook.
The collective view around the table is that we do not pre-commit to a path. And we will be, as ever, and probably more so, data dependent.
Christine Lagarde talking about data dependency. She added that the backdrop is changing dramatically day by day. The euro extended gains to hit the day's high, while bonds fell following the ECB statement.
The UK's Chancellor Rachel Reeves says welfare reforms are needed to balance her budget. Downgraded growth forecasts and higher borrowing costs have left Britain's government searching for more money. Ahead of the Chancellor's spring statement on the 26th of March, Reeves says the welfare system has to change.
At the moment, it's letting down taxpayers, it's letting down our economy because there's too many people trapped on out-of-work benefits, and it's letting down the people who are recipients of benefits because they are trapped on benefits rather than actively supported back into work.
The Chancellor Rachel Reeves there speaking to Sky News' Electoral Dysfunction podcast. But the Chancellor doubled down on her election pledge not to raise income tax, national insurance or VAT.
Those are our top stories for you this morning. Now, in terms of the markets, tariff uncertainty has really weighed on the Wall Street session yesterday, and that continues into Asia also, with a Chinese official blasting the United States for its policies. Looking at the MSCI Asia Pacific Index, it's down 0.9%. The CSI 300 dropping 0.3%. Across the board losses, the Nikkei 225 down by 2.2%. The S&P 500 heading towards a third straight week of losses, down 3.6%. For this week so far. Magnificent 7 shares below the 200-day moving average. The euro dollar, euro has rallied significantly this week, and we're up 0.2 this morning, trading at 1.0809. European stock futures this morning are down almost 1%, and we have the US non-farm payrolls data to come and a speech from Jerome Powell. So we'll look at those jobless figures a bit later.
Well, in a moment, we'll bring you the latest on how the latest moves from Donald Trump on tariffs is playing out across markets. But another story that caught our eye this morning, I mean, if you're not worried about war, for example, by some of our reporting, perhaps you're worried more immediately about your retirement.
Do you get a retirement these days?
Well, exactly. I mean, that's the question that a survey out of the United States is looking at the shrinking number of people who are actually expecting to retire on time, and millions of Americans planning to extend their full-time work or part-time workers simply never retire. This is according to a report from the Trans-America Institute. 36% of workers who aren't self-employed plan to retire at 70 or older. More than half of those surveyed say they plan to work in retirement.
Yeah, that's great. I think if you've got an interesting job, if you enjoy your job and maybe it brings you, a social life or interest and intellectual stimulation, that's super. But unfortunately, I'm a bit cynical. A lot of people in the UK, when you look at the surveys, don't often enjoy their jobs. So I think that's tricky, isn't it?
Yeah, it's going to be interesting. And I mean, part of this also is a financial question too. If you look at how pension funds have performed in the US versus the UK, the US funds have performed much better over the past 10 years, growth of around 6%. In the UK, UK, pension assets as a total have actually been shrinking on average over the past 10 years. So perhaps financially the decision-making process might be a little bit different as well.
Yeah, absolutely. That feels like something for my generation, definitely. Okay, so that's one interesting story that we've been thinking about today. But we should also look at the market reaction to the latest tariff headlines. Donald Trump has delayed levies on Mexico and Canada. Our markets live strategist, Mary Nicola, joins us now for more. Mary, good morning. Should we start with the equity markets? Talk us through what happened on Wall Street yesterday as that news emerged. Such quick changes from the Trump administration. How is it also playing out in Asia today?
Yeah, I think that's where the problem comes in, is the quick changes that we've been seeing. And so equity markets are just showing signs of frustration given the sways that we've seen in trade policies and the abrupt changes. So it's just adding to the volatility, and there's also the lack of clarity that's keeping investors on edge. But then you're seeing this dichotomy coming through where you're seeing an expansion of fiscal policy in Europe and in China, and that's setting it apart from the U.S., and especially highlighting that the U.S. may actually be worse off than the rest of the world.
Talk to us about how this is playing out in tech shares in particular, because we're looking at the NASDAQ on the verge of a correction now.
Yeah, we have to remember how much investors were in love with tech shares for so long and how valuations are quite expensive. So now that the resilience of the U.S. economy is coming into question, people are wondering whether it's worth it holding these expensive stocks. So that's going to continue to weigh on U.S. tech. And of course, what's happening in the U.S. on the policy front is promoting portfolio diversification. And we're likely to continue to see that, especially with how valuations are still quite expensive.
The relief from tariffs, it did help to boost the Mexican and Canadian currencies. We've also seen the Bloomberg Dollar Spot Index weakening for a fifth day in a row. What's it doing to the currency story?
Yeah, I think one thing that's become quite clear is that we're just going to see heightened volatility, especially in the likes of the Mexican peso and the Canadian dollar, because as we're seeing is that all these headlines are causing a knee-jerk reaction. So on top of that, the Canadian currency is also going to be could face another challenge with its own jobs report later today. So forecasts are projecting an increase in the unemployment rate, which of course may signal more easing from the central bank next week, and that adds to the pressure on the Canadian dollar.
Yeah, indeed. I mean, that payrolls report going to be an interesting one to watch as well. Of course, always a kind of key metric for markets to watch. But in this moment of, I suppose, so much volatility elsewhere, what are the sort of expectations we have around what we're expecting to see in the payrolls report?
Yeah, so they're expecting forecasts are for a softer payrolls report. And of course, that is going to be especially in focus with the narrative on U.S. exceptionalism heavily questioned. So the labor report is either going to nullify it or verify it. And I think it would be premature to make a determination on 1 month of data, considering if we look back at the 3-month average on hiring up to January, that's been pretty strong. But there are clear headwinds that are emerging for stocks, and given how vulnerable sentiment is right now, I think if we do see a soft payroll number, it would just exacerbate the recent moves.
Okay. Also a word on Bitcoin then, trading around the $88,000 mark, taking a hit over the disappointment about President Trump's plans and the administration's plans for a strategic stockpile of the cryptocurrency. What was the disappointment?
Yeah, it was actually interesting to see the market reaction, because in many ways it actually could provide a long-term support, because the Bitcoin initially slid in response to the executive order for a strategic Bitcoin reserve, but but the government is still able to buy Bitcoin in the future as long as it's budget neutral. So on the back of that, it's not saying that it's not going to buy anymore. It's just that as long as it's budget neutral. But I also think it provides further credibility to Bitcoin with government support, which I think should actually be a long-term positive.
Okay, Mary Nicola, our Markets Live strategist, thank you very much for joining us with all of those market-moving stories. Of course, the tariff story, so central to what's been happening in markets over the past number of weeks, and very interesting to just reflect for a moment on the comments that we had out of the Chinese Foreign Ministry. Wang Yi talking about defending his country's actions on stemming the flow of fentanyl to the US. This is, of course, one of the key complaints that Donald Trump has, but using some really strong language when it comes to how Donald Trump is approaching the relationship with China.
Yeah, absolutely. Calling the actions two-faced and effectively a pretext, using fentanyl as a pretext to impose tariffs. The US shouldn't return good with evil. That's a direct quote. Or even impose arbitrary tariffs on Chinese products. This from the Foreign Minister Wang Yi. He is a veteran diplomat. He is obviously well known. This is also a major forum, so it does seem like quite a deliberate change in tone and rhetoric. You know, we've been talking about how measured the Chinese government has been in the response to tariffs that were implemented, I'll remind you, only at the start of this week, the additional tariffs from the Trump administration. And this was at the National People's Congress, which is the major political gathering of the year.
And while we've seen this flurry of diplomatic activity from Mexico and Canada to try and delay or to ease some of those tariff threats, we haven't, it's worth pointing out, seen those talks taking place between China and the US. Trump has signalled this desire to speak with President Xi Jinping before that first wave of tariffs kicked in, but they haven't had a call since the US leader returned to office. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.